welcome to this webinar. Thank you for taking your time out. I know you are sitting at a beautiful place in Ibiza with a great view outside. And I'm envious of you. I'm in Karachi, and we have around 17 people who have joined the call, and I think more will join soon. So this is the 20th KSB webinar, and I'm really excited about this because as I was telling Dan earlier, that one of the purpose of this webinar is to record his journey of his association with Pakistan Stock Exchange for a study which we are doing on the history of Pakistan capital markets and the people who shaped it. And Dan has a long association with it, and starting from as far back when foreigners were first allowed to enter the market. And Dan, please do correct me, but the story which I know, you were at Citi in Hong Kong covering emerging markets, and in 1992 when Pakistan opened up to foreign investors, you brought the first group of foreign investors to visit Pakistan, and KSB hosted you at that time. And of course, since then, your association with Pakistan grew much larger, and you became a board director of Laxon Asset Management, and where you helped launch the first local private equity fund and the first and the only local venture capital fund. And of course, your association, you're a veteran of emerging markets. So you founded Algebra Capital, which was acquired by Franklin Templeton. So there are two things which I'm really interested in hearing in this webinar from you, Dan. One is, of course, the journey. Did you come across Pakistan? What were your initial reaction when you heard about this country, Pakistan, which was open to foreign investors? When you visited, how did you feel? What did you think about the quality of companies and the management when you met them? How was the brokerage landscape? How was Karachi Stock Exchange? And then, so that's the journey which I really want to hear about, that story. But also I'm interested in hearing, how did you rank, or how do you still rank Pakistan compared to other emerging markets where you have been associated with? So, there are a lot of questions to discuss. So why don't I pass it on to you, Dan. Would love to hear from you, how did you first hear about Pakistan and Pakistan capital markets? And how was that? What were your initial perceptions of the market?
I think we have to go back even farther as my early perceptions of the country, right? And I'm going to correct a couple of things. The first time I stepped onto the soil of Pakistan, it was when I came over the Khyber Pass back in I'm going to age myself here, 1976, right? Mm. And I came across the Khyber Pass, where it was actually very dangerous to cross the Khyber Pass from coming up from Afghanistan at night. Stones would be put in the road, and old men would lie in the road, and they'd try to make you stop, and then they would jump out of the car and kill you and cut your throat and take everything. normal emerging markets, sort of stories of traveling. And I came into Peshawar, and then I came down to Swat, and then I decided to, I don't know why, but take a left turn up the Swat Valley. And I went up the Swat Valley by about 2 days by car or by bus or hitchhiking or whatever it was. And I was on my own. And I actually lived in some villages where I was the first Caucasian. I can't say white person anymore. Let's just say Caucasian that they've ever seen, right?
Since Alexander the Great. After Alexander the Great.
Exactly. Since Alexander the Great. Exactly. And there was no blue-eyed Pashto then, so anyways, I asked these. I didn't know it, but I asked the villagers, can I stay here? And they all, of course, opened arms, had me come in and gave me food and gave me shelter and everything else. And later on, of course, I found out that by me asking for shelter and by me asking for protection, that's what gets done, and that's what it's in the faith, it's in the culture, and the hospitality shown me then was overwhelming, especially coming from near-death experiences crossing over the Khyber Pass. But anyway, so I lived with the locals for a while, and then in the Swat Valley, and then left. And actually, I left Pakistan for India on the first train that was allowed from Lahore to Amritsar, the Freedom Express. It was the first time in July of 22nd of 76. I remember it. Anyways, but so that was my sort of first experience in Pakistan, which was extremely powerful and extremely warming. Right. About 15 years later, I came back and I had, instead of a briefcase and my long scraggly hair, I came with a, instead of a backpack, I should say, and long scraggly hair, I came with a briefcase, and brought the first group of foreign investors into Pakistan. And that was just after Nawaz first came to power. I think it was 91 when Nawaz came to power in the market. I think first opened to foreigners, either 91 or 92.
92.
And, 92. And, when, and it was a Morgan Grenfell fund, and Citibank was tasked with raising the money for a country fund. In those days, country funds was how a lot of people invested in the emerging markets, which were too difficult to go visit yourself. And it wasn't easy raising the money. I remember as well, from the likes of Schroders, they actually became on the board for a $5 million investment. And I was told by the guy who was running Schroders at the emerging markets at that time, that I tried to call him, and for about a year, I tried to calling him on selling him emerging market equities in Asia, emerging Asian equities. And he called me one day and he goes, Dan, he goes, in a very English accent, he goes, Dan, we only have a written relationship for 1 year, and then I'll decide if I want to have a verbal relationship with you. And then about a week later, I was tasked with raising money for the Pakistan fund. And I said, what the hell? I'm going to give him a call, even though he told me he didn't want to talk to me. And I called him up. I said, I want to talk to you about Pakistan. He goes, come over now. And I was like, whoa. And I went to Schroders, and I had a panel of people grilling me, economics, demographics, etc. And it was a worst meeting of my life. I go to the elevator and I sort of say, but for the right amount of money, it was a Hail Mary pass. For the right amount of money, you guys can be on the board. And go downstairs, make the call to the office, because we didn't have mobile phones then. It was a rainy day. And they said, I got the call from the office saying, Schroders is in. If it's $5 million, gets him a board seat. And that was the cornerstone of the first Pakistan fund. But the lesson that it taught me, and I guess, sorry, there's a long-winded answer as to the lesson it taught me, was offer clients something that's new, unique, different, that nobody else has, and they have to listen, they have to talk to. And Pakistan became that market for me, because it was always going to be a fantastic market. I knew it then. It was always going to offer great opportunities, ups and downs. Of course, volatility is what we all want. You don't want your clients buying shares from you and holding them forever. You want a little bit of activity. So, that's what Pakistan does give you the opportunity. But it really taught me a lesson that my whole emerging market career was off the back of, which is keep offering new and interesting and different markets and frontier markets. And that's why I always try to go to markets that nobody else had been to before and be the first one to open them up, from Morocco and Egypt and Zimbabwe and Tunisia, and anyways, around the world. And that's where I sort of laid my claim to that one conversation I had with, I won't say his name because he's still in the business, at Schroders, very English fellow, where he was willing to listen to me when I started talking Pakistan. So Pakistan always has a warm place in my heart because of it really created my career and started that off. So so that's a long-winded sort of diatribe on my first experience in Pakistan. More specifically on bringing the first group of foreign investors to Pakistan was a very interesting trip, very fun trip. Lots of stories to get into. I can tell you on that trip. We traveled from Faisalabad, Lahore, Karachi, all around, and with a group of about 7 or 8 of us. And I would say originally, everybody from the first days we were in Pakistan, everybody talked about par value. Everything was dividends to par value. How is the stock doing from par? How much is from par value? And very quickly we started to talk to not only corporates, but brokers, although there wasn't many brokers, but we started talking more about, well, that's not what the world looks at. The world looks at PEs, look at PEG ratios and how growth rates are. And I would say within 2 weeks, nobody was talking par value anymore, right? And what it really showed me was that there was this willingness and interest by the Pakistani corporates and investors to really get up to speed on what the world was looking at, because the market had been closed. So it's understandable why they were looking at this one thing, because these were shares given to them or they invested in the company way back and everything was off of par value. So what it really showed me was there was this vacuum that was wanted to be filled, and nobody was coming across as being, well, we'll do it our way, as maybe countries nearby felt. But actually, what else? What do we do? And how do we do it? And what should we do next, right? And it was that also showed me the real interest of investors and corporates and everybody in the local market to actually learn from what was going on abroad. I would say is that I remember that first trip we visited, and again, I will not mention the textile company, but we had a long drive to this textile company that Citibank, the guys from Citibank were taking us around, said, this is a fantastic company. You guys will love the margins, the growth rates, how many clients they service, everything is, you will love, this is our favorite textile company in Pakistan. So we go into the meeting, and we were kind of an intimidating group of 8 of us. And we would all come in, and in those days, there was really no research per se. But just getting a copy of the most recent annual report I would get paid lots of commission just to get a photocopy of an annual report from Millet Tractors or something. And we walked in, the first thing you asked for, and that was part of the reason you went on this trip, was the annual report. So we sat down, big room, warm day, and the secretary comes in and gives us all annual reports. And then we all asked the CEO, can you just give us 10 minutes so we can go through them and understand them better? So everyone's sitting there in 10 minutes, and I'm looking around at all my investors, and I can see their faces just, expression of amazement. They said, looked at the Citibank guy and said, what the hell is this? This company's not doing well. The margins are going the wrong way, everything else. And I will mention his name, a great investor and friend of mine, John Chu, then of GT, says to the CEO, in a very sweet voice, he says, do you know why we're here? And the CEO says, yeah, you're here to buy my company from me. And John said, no. We're here to invest in the company. And he went through about 10 minutes of why, if the stock price doubles, how future projects will look more interesting, and went on and on and on. And the CEO just said, and he yelled something into the intercom. And the secretary quickly came in and picked up all the annual reports, went out for 2 minutes, came back with the real annual reports. Right? It actually given us, it printed up with exactly pictures on it and everything like that. But it printed up, I don't know, fake or whatever, annual reports so that we did not invest we did not take over the company. And then he continued to, tell us what a fantastic company was. But, it was in these early days, of course, we really saw that there was just a misunderstanding of what foreign investors were going to be looking to do and wanted to do. And then quickly, brokers understood it, because just like I think Mark Mobius talks about this in some countries in South America, there were a couple of local brokers who would follow us from our hotel on scooters to each meeting, and they would find out what companies we were seeing, and then you would see a spike in the stock price that day, as they all thought that that's why we were going to go, and that we were definitely going to buy the local shares. But that's to me, that's ingenuity. That's not a problem. But anyway, so it was interesting, and I think we saw that management, just like in high inflation currency markets, or high inflation and then hyper currency markets like Turkey or Brazil in those days, managing a business in the environment of Pakistan was difficult. And some of the CEOs, the treasurers, we love to see treasurers, not necessarily CEOs. We love to see the guys who are managing the money, the daily cash flow, understanding what, and they had an amazing understanding of where the cash was, what they were going to do with it, how much is on overnight, where, in this, and so we saw real attention to detail. So it gave us a lot of confidence. in the first trip, most of the investors had already invested in Pakistan because they knew that everyone was going to get excited when we were there. So they were already long packages or millet tractors or Pak Suzuki, Bank of Punjab, you know, the normal cement, beer, Pak Suzuki kind of things that you bought, Adam G. Oryx Leasing, all the old names. And a lot of these guys were the real reason for being there was to get the custodians, and Citibank was a big custodian, was to convince the company secretaries to sign the share certificates. In those days, you couldn't sell your shares until the company secretary signed them initially. And so these guys were sitting on 100 and 200% gains over a period of 1 to 2 months and wanted to sell and reinvest, but they couldn't because their share certificates hadn't been signed. So the most important people in early days of Pakistan, actually in the early days of the Pakistani market, were the company secretaries, because those are the ones that signed share certificates. And they were often in Faisalabad or someplace out nowhere, in not to say Faisalabad's nowhere, but in the back countries of Pakistan. And they were getting visits from bankers for the first time ever, pleading with them to please sign the share certificate. They were being taken to lunch where, you know, nobody ever recognized them in the dark rooms. And so it was the signing of the share certificates, which was probably paramount to most people's trips to Pakistan, seeing the custodian and getting them to do that. But anyways, I don't know what else can what have I not answered?
Wow, that's fascinating. And I have a lot of questions. Did you, you know, that story of you going to Schroders and they being keen on Pakistan, you know, did you figure out what was it which, like, why were they interested in Pakistan in the first place? And, you know, the guys who were visiting with you, you know, what were their feelings? You said they had already invested in Pakistan, but, you know, were they scared of visiting the country? I suppose this was pre 9/11, so security was not that big an issue at that time. But, you know, what were the things they were asking you? Were they worried about, you know, corporate governance, security, food, you know, what to eat, what to drink?
No, I have to say, I mean, most of the investors that I went to Pakistan with those days were all extremely seasoned emerging market investors, and most of them were selling them their emerging market fund as being that they were first in. You know, and I can say some of the names: Douglas Polunin, you know, he was there, and John Chu and Henry Thornton, Rachel Marder of John Govett, and Battery March, and all these guys who had specific emerging market funds. In the early days, I did not go with anybody who it was only the real emerging market funds that traveled there. Later on, you know, some more of the larger names that were not emerging market or frontier market specialists. Were not emerging market or specialists or frontier market specialists. They started traveling, and those are the ones a little bit more concerned. Those are the ones who wanted security and would bring their own food. I had some investors who did that, and things such as that. But in the early days, I think those guys had all been to a lot of frontier markets before, emerging markets before, and had an understanding. But the guys from Schroders, I think, number one, they saw the opportunity to be associated with a brand new market opening up, and they had done that in other markets in Asia. I mean, look at what happened in Vietnam and Burma when those finally opened up as well. They went crazy, and then people realized that they weren't as exciting as Pakistan. And then the demographics. I mean, it was in the early days of investing in emerging markets, the you know, all the research, and if you look at Mark Mobius's old sales pamphlets on his funds, it was all about GDP growth, right? And you know, that's what you bought. This country's growing at 8%, that one's at 6%, this one at 8%. It was only later on that people realized that was not a high correlation. Morgan Stanley did a great research report on that. What's the highest correlation? What economic statistic had the highest correlation to the growth in the stock market? And it was not GDP growth.
What was it?
It was the growth of the population, I think, between the ages of 18 and 30. It was that growth rate of them coming into the market to buy things for the first time.
Thank you for sharing that.
Yeah, anyways, a really good Morgan Stanley report on that. So anyways, but in the early days it was that, and then came discussions of all the statistics between usage of metals per capita, consumption of milk per capita, comparing India to Pakistan, and then saying only Pakistan has to get up to India's levels of consumption of certain materials and therefore buy the steel industry. Those are the early days that people started looking at those kind of things, and then it was the demographics of Pakistan that made it so interesting to, I think, so many people. The young population, and then you started looking at and talking to people about the fact that the dividend yield in Pakistan was greater than the PE, in those days, right? PEs of 5 and 6 and dividend yields of 9 and 10, right? PEG ratio of less than 0.5. The political uncertainties to most of those investors, I would say the political uncertainties only saw this as an opportunity to buy rather than a fear. And that coup attempts or military coups or whatever else, later on, the first thing that they would do is make sure that the central bank president and the finance minister, their first announcement would be that they're not leaving their position. It's only, the PM that's leaving because, in many cases, they had their pension invested in the market. So they didn't want the market to fall. But so most of those investors, political uncertainties did not concern them. But the high GDP growth, also I think for a lot of people, the underinvestment by international investors, of course, and the fact that they were going to have to grow, it was going to have to go up, and also the lack of institutional investors. The lack of institutional investors meant that the market was going to have to develop, and that you were going to get pension funds, insurance companies, and the government mandated that they had to buy certain amounts of their portfolio had to be in government bonds, but that was viewed that was going to change, and they were going to be allowed to invest in the local equity markets, and then that was going to be a big change. In the early days of Pakistan, the market was dominated, of course, by retail, which meant that rumors were put out by brokers, and retailers would dive in, and the rumors would come in, and that something was going to happen, and the stock market would go up, and then all of a sudden, they'd be selling because the rumors turned out to be not true. So there was a lot of volatility based on that. But I think, I think a lot of the early investors saw that Pakistan was going to be the next India. And they also saw that the PE gap, or whatever you want to call it, between India and Pakistan, a lot of people thought that not only was Pakistan or India going to do well, but that PE gap was going to close. And it still is a thought by many that that's going to happen.
Yes, but perhaps now they compare it with Bangladesh and Vietnam. So now they think that it should be the PE gap with Vietnam and Bangladesh. And
yeah,
Egypt.
Exactly.
But it's remarkable that that a lot of the investment thesis is still the same, and it's and also that you still remember the investment thesis as well as the name of the companies which were which you were trading back then. So there was this.
I'm not that old, okay? I'm not that old. I mean, I'm old, but not old when my mind has gone that bad.
Well, certainly not. And you're a Ibiza, so you're having a better time than most of us over here. So that was the 90s, and then when all of these emerging markets, people were willing to take higher risks, and as you said, they were these specialist, mature investors who were proud of or were willing to be the first investors in new markets. But then I feel that post East Asian crisis, and then in Pakistan post 99, when they froze the accounts for a short time period, that really dented investor confidence. And then there was almost a new time period between 2000, of the decades of 2000, and you were then associated with, in a different capacity, on the buy side as a board member of an asset management company. How was that experience, and how much do you think the market had evolved since you first saw it, and then when you came back?
Well, you're right. I think the most disastrous, sadly, assassinations and coup attempts and all those sort of horrible things. But the most disastrous step that Pakistan took was the closing of the market. You got put in the penalty box for a number of years for that one, right? And I think you probably, probably you got a new group of investors who don't remember that now, right? But that took you down to frontier market status for a number of years, and so that was I mean, in one sense it was good because you're a larger player in the frontier markets, but the frontier market funds needed you because you created liquidity, because most of their other markets that they had traded $5 million a day versus you guys, and so you actually a bigger player in a small bowl, bigger fish in a small pond when you're a frontier, but just not as much money was available. But so that was a disaster without a doubt. I would say, just going back on one thing on security, you're right. You never knew whether or not somebody was going to pick you up at the airport who was packing or not. But it was always funny that sometimes you arrive in Pakistan and you would have a police car in front of you and a police car in back of you, and then you'd be in a white van or something like that, basically telling everybody around, whoever wanted to get to foreigners, shoot here in the middle, right? I always told everybody, listen, guys, I'm taking a local taxi from the airport to the Sin Club. I'm not going in a big white van, right? I want to keep low key because they're not going to shoot at a taxi, but anyways, so you're right. It took a while. I think what you have seen though is that as what was interesting was that as Pakistan went to the emerging market fund back again, it still was kept as a frontier market by a lot of funds, because it did represent the only liquid market when people would get, especially when people did what I think was incorrectly add a daily redemption frontier fund, which is just, shoot me in the head. You don't know what kind of redemptions you can get. At a certain point in time, you will have to close the fund because you're going to get too much redemptions on a daily fund. People did still keep Pakistan as in their emerging market fund, even though it was a frontier market, because they needed that liquidity. But moving to the buy side, I guess, of course, there's a lot more. Of course, more research, more information. People like yourself started up. We did take Khadim Ali Shah Bukhari public a year after the market opened up with Khadim Ali Shah Bukhari. So I had the opportunity of running around the world with him, talking to people about why Pakistan, and actually his father as well, Sultan, and had an opportunity to travel with him and talk about Pakistan. He was a very, very wise man, very nice guy.
Khadim Ali Shah Bukhari, yes.
Yeah.
Nasir's father, Khadim Ali Shah Bukhari, yes.
Exactly. Well, I guess we always call him Sultan. I don't know if that's what.
Really? I was not aware of that. Okay.
Yeah. Anyway, maybe that was just me, or maybe that was Nasir telling me to call him Sultan and making that an inside joke.
It must be Shah Saab.
Shah Saab. Maybe that's it.
Yes. That makes sense.
You might be right. Shah Saab. Yeah, you're right.
Yeah.
Anyway, so I think in terms of coming back on the asset management side, I guess with working and starting up the asset management company at Loxton, I saw the same opportunities existed in managing money a better way, just as we saw opportunities to broker and write research on Pakistan a better way in the early days. And so I saw the same opportunities where locals were not local investors, institutional investors, were not given the same benefit of what was going on elsewhere in the world in managing money in Pakistan. And so that's where working with with Loxton, I saw the real opportunity and excitement. And we started doing things like going to clients and showing them the risk profiles. And for the first time, they saw issues around where the risk was, and they all wanted to just own 100% of Adam G because that had always done them well. And the dividend was this, and we started to show them that where they made the money on our profiles of, did we make money for them on a macro level or a micro level? And how that money was made. And how did they outperform the market and stuff? So I think, and of course, and then the analysis. So I think early days, we managed money in a very institutional-like framework. And that was a new thing, I think, for Pakistan. And then since then, a lot of good asset management companies have come up, managing money more, more institutionalized. The next step was, of course, it was writing on the wall. It was just a question of when the market was going to be ready for a PE and then a VC fund. I think there's been it hit me one day. Kalsoom Lakhani, I don't know if you know Kalsoom, not a Lakhani, nothing to do with Luxon. She did a really good website that showed for the first time where all the activity was happening in incubators and startups and this and that. And I was one day just sort of going through it and just saw all these places all around Pakistan where there's different incubator, different things starting up, corporate venture capital, this and that. And I just really came to me that this was, LUMS was doing stuff and, people were doing things early on. Angel investors, that was more angel investor groups, small little groups. And I really realized that this was, the time was right to start a PE fund for so many reasons in Pakistan. And that really what I thought was most exciting was to start a VC fund, because that was really going to give access to capital to individuals that, that were, there was a great democratization, I guess, process that was going to happen in Pakistan. That, if you worked hard and you had a good idea that, you could create the next, KASB 100 company. And that access to capital, of course, was always going to be easier for a Siddiqui, for a Lakhani, for a Habib, for a Faruqi, for a Mansha. They were always going to have an easier access to capital. But access to ideas, no. And that was for anybody. And then the market started making it available, capital available to people who were not coming from the, what do you call it? The state families, right? Or whatever. And that, you could have a good idea, and that's all that really mattered. And I think that democratization has done amazing things for Pakistan. And I would imagine, I don't know if Faisal's on the call, but in our VC fund, I don't know if any of those people that he's backed are of those names. They just have great idea, working hard, and it's a disruption. And actually, where in the old days, as I said, you looked at all those fintech issues to determine whether or not certain areas and markets were going to rise, certain companies were going to rise. It's now more about internet connectivity, e-commerce connectivity, e-commerce activity versus the rest of the world. Fintech, you don't need a bank that's brick and mortars. It actually becomes a hindrance. How many people are nano lending, have access to a mobile phone? You look at e-commerce activity or traveling, and how many people are buying their tickets, bus tickets on the phone. It's so minimal. That's the excitement, not necessarily per capita protein consumption. And so that all these things started happening, and it was inevitable that the VC business would be activity. What I am happily surprised about is in the last year and a half, the interest by overseas VC firms, not just Dubai, but overseas VC firms to invest in Pakistan, and they realize that there's a human capital. It's a nascent industries in so many ways. There's so much opportunity to disrupt, and the quality of managers as well as individual proclivity to work hard is there. And so they in 230 or 250 million people, most of them young and with a lot of buying power soon to come, make it all very exciting. So all of that made it quite clear. It was an easy was an easy guess that the VC industry was gonna grow quite dramatically.
No, thank you. That's very interesting. And as you rightly put it, and throughout your talk, that it's the people in Pakistan are quite enterprising, and they're hardworking, they're willing to learn, they're eager to learn and eager to work hard. And I suppose that the barriers to entry in the traditional world were the fact that the industries are oligopolistic in the nature, and the bureaucracy and the rules favor the big ones. And perhaps that's the biggest opportunity with tech. You, as you said, democratizing. That if you have good ideas and then capital can flow into you, then because that space is not right now not heavily regulated and there's fewer bureaucracy in it, there's a room for growth. And so that's fascinating. Dan, I'm also interested in another thing we missed in your career path. Like you also set up Algebra Capital, so you moved from Hong Kong, I suppose, to UAE. How was that move, and how was that experience? Setting that up, and then you mentioned Mark Mobius a few times, and of course your company was acquired by Franklin Templeton. So how was that experience? Were you investing at Algebra? Did Algebra also invest in Pakistan? And my second question, which I want to talk to you about, is how did you compare Pakistan with the other markets which you mentioned where you have been involved in, Egypt and Vietnam and Burma? And how has their journey been different? So, now when you look back, what has Pakistan done well? What has it done worse than some of those markets?
Right. Okay. Well, first, the move to starting up Algebra Capital, which I don't think many people on this line know Algebra Capital, but it was the first Middle Eastern asset management company that wasn't owned by a bank. So many banks had asset management departments, but this was the first independent asset management company. I moved to Hong Kong from Hong Kong to UAE to run Deutsche Bank's asset management business. But I really wanted to start up a local asset management. And I was going to do so at Deutsche. And the team that I found that was just starting, I tried to hire. And they said, well, we don't want to go to Deutsche. Why would we want to work for Deutsche Bank? Why don't you come work for us? We're going to start this up. And I said, that sounds like a great idea. So I left the head of Deutsche Asset Management, and I started working down, in a conference room at the Radisson Hotel for Algebra. And we were the first independent asset management company in the Middle East, and that was quite a run, and it was a great group of people, but it was only investing in basically the GCC and Northern Africa. The movement was I ended up organizing again with Schroders, this time with Alan Conway. Where we ended up running a fund for them, and then Franklin Templeton took a stake in us and ultimately bought us out. And we ended up raising about $1.9 billion in about 9 months. And it was a perfect, number one, of course, I was in charge of raising capital, but of course it was my amazing capabilities, but I'd love to say that it was a perfect storm. I had an amazing fund manager, Joe Calcabani, told a great story, and we ran around the world just when everybody was excited by the Middle East, and it took off. That 1.8 billion dropped to 300 million, at the Lehman Brothers crisis, and so what comes in fast, can go out just as fast. But we had a couple of great years. But so that was, I guess I learned a lot from starting an asset management company, and that I took that to Luxon, and I think they've lasted far longer. I guess why Pakistan is very different from a lot of other emerging markets is once again, I think the entrepreneurship. I mean, there's in every market there's an entrepreneurship group, class, whatever you would say. I would say is that it's as a percentage of the population, it's larger in Pakistan, number one. But I'd say that they're number two is there's a voluminous local market. So not everything has to be sent overseas. Not everything is based on, well, what are your sales going to be to, to the US? You're the large, exciting local market where if you do believe that the rupee is going to depreciate, all right, then, buy exporters. Okay. And if you do believe that there's a local issue going on, where, the local population, the banks are going to be, the local individuals are going to be opening up more bank accounts, and buy Bank of Punjab. I mean, or that there's stuff going on in the agricultural sector, then buy millet tractors. And whatever you do, never sell packages, right? But it's, so I think that there's always that. In a lot of other markets, you bought when there was going to be fantastic export, or you sold everything in the market when there were the currency wasn't going to move. And in Pakistan, you actually had big enough for both. And I think as well is that the companies, by their English heritage, with the English legal system, on the positive side, you also got the English bureaucracy on the negative side, but and the legal system was always good in Pakistan, and I think and there was a lot of companies that had good company reports and good accounting, and all the accounting firms were there early on, and so those kind of things, you gave investors comfort, because in most cases, investors are looking for reasons not to invest, and so all you have to do is start showing them comfort on reasons to invest, and check off the reasons not to invest. Corporate governance, I always used to get so pissed off when I'd hear about corporate governance, because yeah, sure, I was taken to the cleaner by an edible oils company that never used the money for that and did something else with it, and there's always cases of somebody raising capital and not using it for whatever reason, and but I loved it how Americans would point to that and then they would forget about Enron or Madoff or an incredible situations in their own market, home market, but they never seem to remember that when cursing out the domestic corporates. But so yeah, sure, you had your cases, but on average, I mean, in the early days, you in the 90s, the reason you went on trips to local markets was so you could sit down with the CEO or the treasurer and say, so what are earnings going to be next month? When you announce, are they going to be 273? No, I think they're going to be about 10% higher. Okay, great, thanks. Write that down, make the call, buy the stock. I mean, that's why you travel to these markets, right? That's why you got Delhi Belly. You went there because you could, get some information, and sadly, that was taken away from us.
Yes, no, thank you for that. And a lot of, I think the perception is worse domestically in Pakistan than it is outside. And then I wrote a blog on it that, just the fraud on Wirecard was bigger than the total market cap of Pakistani market. So,
Yeah.
But I hear corporate governance being talked a lot more within Pakistan, where people, use it to talk down the stock market and highlight the issues, although, they are peanuts compared to the issues.
It reminds me, just briefly, it reminds me why it was clear to me why Trump was going to be a nail biter between Trump and Biden, because I looked at the poll where they asked people, who is your neighbor going to vote for? Oh, my neighbor's going to vote for Trump. Because the individual would never admit that he was going to vote for Trump, but his neighbor was going to vote for Trump. And that poll showed that Wisconsin and all these other countries, the market, states, was actually going to be very, very close. So I think that all those people who talk about corruption in Pakistan,
that makes a lot of sense. That makes a lot of sense that they're projecting it outwards. And when you were talking about your time at Deutsche Asset Management, I remember that, of course, that's the time when we were first introduced, and you were kind enough to set up my interview with Kingsmill Bond, who was at Deutsche. He was a strategist at Deutsche in London, and later on he moved to, I think, Troika Dialogue in Russia. Very
English man. Always
2005.
Yeah. remind me of,
Yes, he came to meet me at Oxford.
when I brought to Pakistan, I brought Jacob Rees-Mogg.
Ah, really?
Yeah. So I brought him.
How? Yeah, Somerset Capital, when he was running.
This is when he was with, this is before that. This is before Somerset. And he traveled around with me to not only Pakistan, but the other places in Middle East. And he always wore his three-piece suit. And it was always buttoned, no matter how hot it was, no matter what. And so I remember traveling with him in Pakistan, and it was always quite interesting to hear him ask these questions in his rather very English tones. What's great about Jacob is that he takes the piss out of himself just as much as people take of his accent. But yeah, I remember those days in Pakistan where he would always turn up in his three-piece suit, no matter what day. It was in the same thick three-piece suit. But anyway.
Wow. Yeah, that would have been fascinating just to see him ask those questions to the companies. Yeah. His kids go to the same school as mine, so that's my only connection with him. He's
how many? All 6 of them or 8 of them? I don't know how many he's on now.
Yes, quite a few. So we are now open for questions. The way to ask questions is please put them on chat, and I'll put them forward to Dan. We have 14 more minutes. Faisal is also on the call. So first, he's giving you a shout out. But Faisal, I think given that you're on the call, I would love for you to unmute yourself, and because we were talking about lakhs and VC and how venture cap is such an important asset class in Pakistan, because it has the power of democratizing and giving capital to people who have ideas. Because as Dan was saying that while of course in Pakistan a few have control everything, but they don't control ideas, and that's the opportunity. So he had this point that he was asking whether I think the companies you have invested in, they're not the state kids, right? They are the entrepreneurs you're backing. They are like common people who have good ideas.
Absolutely. Thank you. Hey, Dan. Good to see you as always. And thanks for engaging me. Yeah, so look at the smartest funds that I found, and Dan and I agree on this. The revolutionary change that's going to happen with this entire ecosystem is going to have economic and socioeconomic consequences, right? So, like, I'll example book me, Farzan. I mean, he comes from a humble background in Saif, but he's a go-getter. Those guys, they're hungry to grow, and put money behind people. The quantum of growth of wealth is going to be ridiculous. So, in the traditional economy, if people, let's take the big stage, like let's say if it took you about 50 to 60 years to accumulate $1 billion, it's take these guys 7 to 10 years to accumulate $1 billion or get worth of 250 million more, right? So look at Mr. Sheikh, for example, right? He's ended up with around, I think, 300 million was in that from 2000. I want to say 14 is when Green launched, 2015 till 2019 with the exit to Uber. So that's how we have to look at it, right? So as over this decade, I believe Pakistan's going to lead with digitization, and I think you have at least 5 unicorns to be created by 2030. That quantum of wealth is going to get redistributed, and these guys have influence on the government policy. So and then the main one also is the influence of social media, because they become icon, almost like football players and basketball players for the African community in the US. Essentially, these founders are going to make that role, right? They're heroes for masses and the younger crowd, our youth. So I think that's going to have some profound change in Pakistan.
Oh, thank you for that. Your voice was breaking up, but I could figure out what you were saying when it was breaking up. So, but thank you for that.
Sorry,
Dan, I'll ask you another question. That you have been early mover, and you seem to be really good at spotting the next opportunity, and then whether it's Middle East or whether it's these emerging markets in 90s. What do you think besides VC could be the next opportunity, both for emerging markets in general, but Pakistan in particular?
Well, I mean, I don't think you have to look farther than the seed capital, VC capital in Pakistan to find great ideas, great people, great, hardworking people who are trying to disrupt. And I think that's the issue, disrupt the normal ways of doing business. And and again, I remember I've seen I'm very much involved in an edutainment company called Lamsa, teaching Arabic to children through edutainment, and we're based in Abu Dhabi. And they were talking about whether or not it could make it in Pakistan, but people say, oh no, it's a subscription model. You got to pay $6, a month to get the content. And everyone said, no, it won't work. And then all of a sudden, the concept of subscription and paying through your mobile phone and everything else, within 6 months, three to 6 months, it just completely switched. And everyone said, yeah, bring it on, bring it here, quick, everything's happening, it's changing, right? So I just think that things are going, there's such a fast disruption and acceptability of buying things via e-commerce. As Faisal said, I mean, a great example is BookMe, to buy your bus tickets and all the other things that can happen once you buy your bus ticket, all the other things you can get the food delivered to the bus before it goes. You can know that when you're sitting in London and you're going to go home, and if you're living in some city far outside of Faisalabad, how do you make sure you get all the way there? And you can do that beforehand online and all this kind of stuff. I mean, it's just going to be a part of people's lives. And I think, to me, when you are solving a problem rather than wasting a time using the e-commerce or internet or whatever else, that's when the real opportunities arrive. And I think, something again like BookMe, where you're actually saving time and solving a problem, because people don't want to get to a bus and find that it's full and they have to sit and wait, especially when you only come in from Dubai and you only have 5 days with your family. These kind of things. And also, I think, transferring of money, cheaply and borrowing, nano lending, and all of that activity that's going to go on in nano lending, I think is exciting. So I don't think you have to look farther than what's going on in Pakistan in the VC area. PE, a little bit different. PE is, is interesting. It's good. I'd say it's more for an institutional type of money, where it's a little bit more secure. You're buying companies that already have a proven track record. Not to say it's not exciting, not interesting, but it's more for an institution, more for corporate investments. But I think everybody should have, 5 or 6 or 8 or 10 investments of a small amount in a VC, in VC, either companies or in a fund. Problem is 4 or 5 will go bad, and when the bad ones go bad, they go bad fast, and when the good ones always take a while longer to do well. And out of 10 investments, 2 or 3 will be fantastic. 3 will make your money back, and 4 or 5 will go bankrupt. But that's why you need a portfolio or someone watching it very carefully. So I think there's a lot of opportunities there. Other emerging markets, other frontier markets. I know I should be more excited by Africa. I know I should be more excited by Latin America. I would still say, sorry, that I wish I could be more illuminating and sort of picking and telling you Ecuador is it and everybody should pile in Ecuador, but Pakistan still trades at a discount.
Thank you. I love your love for Pakistan and excitement. I wish people in Pakistan have more of that, and you certainly have been a part of Pakistan's financial markets history. And then I just remember that when you were mentioning the IPO of KASB Securities, it was the first capital markets business to go public. So even that part of Pakistan's capital markets history.
$5 million. I think that's what it was. But yeah. And then it was a great path for KSB, and I think I think you guys were one of the first ones to actually work with internationals. I think with Merrill Lynch, if I'm not mistaken, and then came a bunch of others that followed suit. And I think then the closing down of the market was not good. But so I think again that shows this interest in this hunger for knowledge, this hunger for development. And that's what you don't get in a lot of other emerging markets, where I think people are a little bit more egotistical. I didn't find that to be the case in Pakistan. People are hungry to learn more.
Thank you. Yes, I totally agree. That's what I find here as well. And the last question before I stop you from going into the pool outside. Did you ever go back to Sawat?
No, sadly
No.
not. I'm looking forward to an invite. I think there's a yearly trip up to Chitwal and up to Gilgit. I never made it up to Chitwal and Gilgit, and I'm hoping that COVID's going to pass far enough that I'll get there. But no, I do want to get back.
No, you certainly should, and hopefully when COVID. Now we have a vaccine, so hopefully, next year we'll also organize a trip up to the north, and we'll send you an invitation.
I'm there.
Thank you for your time, Dan, and have a lovely day.
Thanks, guys.
Thank you. Take care. Bye-bye.